We were at about 193 or so in the New York session. But the move up in rates, relatively speaking, has buoyed the dollar. We're, if you look at the Bloomberg Dollar Spot Index now, higher by less than 1/10 of 1%. I think the big story in currencies is the weakness that we are seeing now in the yen, 118.93, so we're down about 0.2 of 1%. Offshore Chinese currency, a little stronger here at 6.3614. More on markets in 15 minutes. Let's get those global news headlines from Ed Baxter in the Bloomberg Newsroom in San Francisco. Ed?
For you, of course, Douglas. Magnitude 7.3 earthquake struck northern Japan near Fukushima Prefecture overnight. Prime Minister Fumio Kishida says 4 people were killed, at least 97 injured. It derailed a bullet train, disrupted power. Some rather noteworthy numbers coming out of South Korea, confirming over 621,000 more coronavirus cases and a record surge in cases, which is what that is, and then record deaths also reported out today. So we'll continue to watch that as more information comes out. Hong Kong's crematoriums are straining under the pressure of the COVID-19 death rate. Chief Executive Carrie Lam says they're working day and night to keep up. Kremlin spokesman Dmitry Peskov says a proposal for Ukraine to become a neutral country but retain its own armed forces is a positive step and could be viewed as a kind of compromise. Ukraine's President Volodymyr Zelensky today in front of Congress has called for President Joe Biden to be the world leader, and President Biden promising a laundry list of munitions, including drones, calls for Vladimir Putin a war criminal. Munitions include 100 dive-bombing Switchblade drones, and Vladimir Putin has vowed to cleanse Russia of, his words, the scum and traitors that he accuses of working covertly for the U.S. and its allies. In San Francisco, I'm Ed Baxter. This is Bloomberg.
Bloomberg Opinion, informed perspectives, and expert data-driven commentary on breaking news.
It is 8:50 p.m. on Wall Street. Time to check in with Bloomberg Opinion. We are joined by opinion columnist Shuli Ren, who has written about how President Xi Jinping doesn't care if China is uninvestable. Shuli, brilliant piece. I know it goes more to the figurative sense rather than the literal sense of that headline. But I wonder whether or not it gives you a little pause for thought. The intervention we saw yesterday from China's top leaders, led by Vice Premier Liu He, about vowing to protect the and ensure stability markets.
People need to make a distinction between the emperor and the general. If you read President Xi Jinping's speeches, you'll see about the stock market. He has agreed to make a policy concession in light of the potential energy and the food crisis caused by the Russia's invasion into Ukraine, but he has never talked about the stock market. On the other hand, Liu He is the chair of the Financial Stability Committee, and it is his job to stabilize the financing conditions in China. And the stock and the bond market sell-offs that we saw in the last week, in part because of the geopolitical tensions, is not good for the Chinese companies seeking funding. So I think, sometimes the emperor will give a general some free rein, but that doesn't mean that the emperor has deviated from his true path. That's basically my defense.
Shuli, do you think things have changed? I mean, I know you wrote this piece a couple of days ago, but then yesterday we did have that kind of indication from state media that perhaps the crackdown has stopped or will ease.
I think if you read the Xinhua News Agency statement, it's a lot of should, and there's nothing concrete, no concrete policy changes. And also, one thing that I'm worried about is, during President Xi Jinping's reign, he has turned China into a society with a lot of rules and the laws. He has passed the cybersecurity law, the securities law that has been updated to include the prominence of China's sovereignty. And I just think, all these have crackdowns on data security, and a part of that is Chinese companies' accounting books, right? They are written into law. So maybe, some parts of the higher political power, they will make concessions once in a while if the market panics. But the true fact is they are in the law and they need to be executed.
Some critics of this stance that you're putting forward, that is, you say, Xi's stance, some critics would say that China very much needs foreign exchange. It doesn't have a freely convertible currency, and it probably took note when bond flows slowed down a little bit. They've been trying to attract foreign capital through a lot of ways. Now, you can say that through the export regime, they generate a lot of raising of dollars in that. But the problem with that is that, if people start avoiding Chinese assets like stocks and bonds, they may also stop buying as much from China in terms of manufactured goods. And then you have a problem with growth. And when growth is an issue now, that could be a very big problem, Julie.
Absolutely, Brian. So like if you look at the press release, right? Like they talked about like foreign investors, but they use the word long-term foreign institutional investors. I don't think that they care about like short-term hedge funds, what they do, whether they're selling out Chinese ADRs. There's a distinction between FDI, foreign direct investment, and the portfolio flows. So I think what's happening is that U.S. investors still account for. I mean, China has been a very hot market, right, for many years. U.S. investors still account for a significant portion of the ownership of Chinese stocks, and we're seeing a seismic, almost an earthquake, in the easing of ownership of Chinese companies. I mean, as U.S. funds recede, because they're worried about secondary sanctions, this and that, right? There will be Chinese funds coming in to buy, the Alibabas and Tencent for cheap. And we saw that overnight. There is a lot of retail demand, and I think from mainland China. So I think, in a way, it's not too bad. I mean, right now, like those offshore Chinese companies, they are too heavily concentrated in foreign hands. And China doesn't really care, to be honest, if they're jobs. But if they're mainly owned by Chinese hands, the government will be a little bit more careful when they talk about crackdowns and things like that.
So we've made the point they don't care about, people are losing money about short-term volatility, but they do care about growth, and they've got this ambitious 5.5% growth target. You had UBS yesterday saying that is not likely to happen. They've got a forecast of 5%. What about the impact of continuing with COVID zero, the war shocks? I mean, how are they going to get to this 5.5% growth target?
I don't know how they can get to even 5%. I think the COVID zero policies are very bad. I think most of the Chinese provinces have outbreaks of Omicron, and what they're doing is still lockdown, right? And then China's retail sales is terrible. Even before this whole Omicron outbreak, there was a very prominent online small business sentiment survey, and small businesses say that their revenue is only 1/3 of pre-pandemic levels. So I don't know what the number is going to be, like 10%, 12%. I mean, Shenzhen is in a full lockdown this week. Shanghai, my hometown, no one is going outside.
Just really quickly, back to your original piece. Is it hubris by Xi Jinping?
I think Xi Jinping doesn't care about day-to-day market volatility. He has a long-term vision. And I mean, if you go back to 2018, right, he talked about corporate deleveraging, and that track was being halted a little bit. But he came back 2020. He will come back.
Okay. All right, Julie, out of time. It's a fascinating subject. Thanks very much. We've been chatting here with Bloomberg opinion columnist Julie Wren. You can read more on her pieces on the terminal. This is Bloomberg.
It is traffic and weather on Bloomberg 1130 on the Henry Hudson Parkway. The off-ramp northbound of the George Washington Bridge partially blocked with a stalled vehicle. Heavy on the Brooklyn Bridge in both directions. And there is construction east on the Grand Central at the 94th Street exit. In New Jersey, 78 slow in both directions. At exit 17 due to a tractor-trailer accident. On the George Washington Bridge, minor delays, 15 at the outbound Holland Tunnel. No delay at the Lincoln. Alternate side parking rules will be suspended on Thursday for religious observance. Bloomberg 11-3 sports in the NBA tonight at Madison Square Garden. At halftime, it's the Knicks 66, Portland 55. The Nets lead Dallas at halftime, 61-58. Later, the Devils will take on the Calgary Flames. And the NCAA college basketball playing game tonight with Rutgers taking on Notre Dame. Bloomberg 11-3 three-day weather forecast. For tonight, we will see increasingly cloudy skies, a low of 45 degrees. Tomorrow, occasional light rain, high 55. Tomorrow night, mostly cloudy, low 45 to 50. Friday, mostly sunny, warm, high 70. And Saturday, showers and cooler, high near 60 degrees. For Sunday, partly sunny, high of 55. The best ride in and out of the city, Bloomberg 11-3 bringing you global news 24 hours a day.
Live from the financial capital of the world, broadcasting across the globe, this is WBBR New York, Bloomberg 11-3.
This is Bloomberg Daybreak Asia for this Thursday, March 17th in Hong Kong, Wednesday, March 16th in New York. Coming up this hour, Asian stocks jump after the Fed signals the U.S. can absorb tighter monetary policy. The Fed lifts its key rate a quarter point and signals more rate hikes are ahead. Chinese ADRs soar after Beijing vows to keep its stock market stable. Kremlin says progress in Ukraine negotiations. Zelensky pleads with Biden to be world leader. Biden promises more munitions and calls Putin a war criminal. I'm Ed Baxter with Global News.
Novak Djokovic will be allowed to defend his French Open title despite being unvaccinated. On the enforcement, I'll have that story and more coming up in Bloomberg 4.
That's all straight ahead on Bloomberg Daybreak Asia. On Bloomberg 11-3 New York. Bloomberg 99.1 Washington, D.C. Bloomberg 106.1 Boston. Bloomberg 960 San Francisco. Sirius 119. And around the world on BloombergRadio.com and via the Bloomberg Business app.
9 in the morning in Hong Kong. Equities will begin trading at the bottom of the hour after that enormous rally yesterday in Hong Kong shares. The Hang Seng up 9%. Will the trend continue? Million-dollar question. If you're joining from anywhere in the APAC, good morning. I'm Dick Prison at the Bloomberg Interactive Broker Studio in New York. And
here, and we're seeing some reasonable gains on the ASX again. For a closer look at what's going on in the markets, let's get to Brian Curtis. Brian.
Well, thanks very much. Yes, we are seeing gains there, 1.2%. Also in Tokyo, the Nikkei is up 3.6%, a nearly 1,000-point rally in that index. We'll be looking forward to the Hong Kong and China markets, where a lot of the action emanated yesterday. Right now, the TAIEX in Taiwan is up 2.5%. And in Singapore, the Straits Times Index recovering 1.3%. Of course, a lot of these markets have down a lot and are having a relief rally here. We had a nice rally on Wall Street, even with the Fed raising interest rates by a quarter percentage point. The S&P 500 was up 2.25%. The NASDAQ really responded well, gaining 3.8%. Now, to the China market, so we had a lot of developments regarding whether or not China was interested in stabilizing, keeping the cap